another edition of the show, Frontier Opening Bell. Thank you for joining us. I'm Temple Ashaju, post number 5 executive editor here at Frontier Africa Reports joins us. Thank you for coming through. We've got Ali Seger joining us as well from Seger and Associates based in Dubai. And of course, Onyeka Ijoma from Vetiver Capital Management. Thanks a great deal for coming through on the show this morning. We're checking with the markets where the Nigerian Stock Exchange was marginally up on Wednesday by 0.02%. The BRVM Stock Exchange moved upwards as well by some 0.62%. We look at the Egyptian Stock Exchange based in Egypt, Cairo, was down some 0.35% midweek, while the Nairobi Stock Exchange, in spite of some buying and selling, huge buying and selling we've been seeing lately in that pause, was down, of course, marginally by 0.04%. And the Johannesburg Stock Exchange moved lower by 1.17% yesterday, the midweek trading session. We look at the Eastern African headlines now, where Kenya's 18-year infrastructure bond of some 60 billion Kenyan shillings was overbought by more than 147%. Kenya also plans some $12.4 billion external borrowings by 2022. That's next year. You got the Nairobi Stock Exchange also looking to sell state shares in Safaricom. Nairobi boss also wants to buy some 4% stake in Dar es Salaam Stock Exchange, which is based in Tanzania, a neighboring country in that bloc. And you have DERD talks collapse as Ethiopia rejects US and EU's rule. Also, let me bring these headlines before you for some judgments and editorial judgments.
Thank you very much. It's a whole lot of stories in there with borrowings. The news out this morning that Nigeria is also planning to do about $6.1 billion Eurobond, according to Reuters. We'll get to Nigeria's story in a short while. But that was a very good confidence that Kenya's infrastructure bond, which is locally, was overbought by that huge percentage. It shows the whole lot of confidence in the fact that the investors have confidence that, yes, there's a whole lot of there are a whole lot of things to be done in preparation for the reopening of the economies around the world after the pandemic. And I think doing very well in agriculture, horticulture, and a few areas like that, in tea production and all of that, coffee. I think there's a whole lot of infrastructure that Kenya can put up and continue to be a game changer. The latest World Economic Outlook is forecasting Kenya will be an outlier for the rest of Africa this year, 7.6%. That looks a bit ambitious, but give them a chance and I'm sure they will make a very good one, all ahead of the next year general elections. So we're not surprised that the IMF just approved a new package of billions of dollars in rollout to Kenya, and news from Bloomberg this morning is that Kenya is looking for additional, I think about $500 million thereabout from the World Bank in terms of budgetary support as well. It's most likely that having met the conditions of the IMF, the World Bank will more likely release this $500 million to the Kenyatta's administration. So the whole borrowing plan of about $12.4 billion between now and next year is very fast and furious. If they are very focused on what they are borrowing for, then that will be good news. But if you look at the social media, over the last few days with the IMF loan, it's been a whole lot of hard hitting against the administration in Nairobi about the rate at which Kenya is piling up debt, and folks on the ground in Kenya says they're not seeing the impact of that yet. They believe the government is borrowing too fast and revenues are not coming so fast at the same speed to service it. So it's a whole lot of delicate balancing for the Kenyatta's administration. Kenyans, some of them are worried that there could be a whole lot of debt left behind for the next administration and all of that. So they're worried that the Kenyatta's administration is piling up so much debt for the next government to inherit. That the jury is still out on that. Nairobi Stock Exchange, Securities Exchange buying 4.something% in Dar es Salaam Stock Exchange. That is one good news. I want to see more of this across Africa. I want to see Nigeria and Ghana Stock Exchange or the BRVM exchange this kind of shares. Remember, both the Dar es Salaam Stock Exchange and the Kenya Stock Exchange have a relationship. Nairobi Securities Exchange was part of the IPO planning management for Dar es Salaam, is setting it up. So it looks like a whole lot of things are going on very well. Spoke to one of the investment traders and analysts in Kenya yesterday evening. It's a Kenyan, and he spoke about how well positioned Kenya is moving to see this kind of transaction go on. They can see a whole lot of new things coming through from the new president the female president in Dar es Salaam in Tanzania right now, that she's focused on economy, and Kenya doesn't want to lose out on that particular. You find a number of Kenyan companies that are dual listed on the Dar es Salaam Stock Exchange. That is also good news, by the way.
It's a great deal for those bossing, and I really would like to see that sort of integration playing out among the stock exchanges. If it starts with the capital market, then perhaps it can, go wider and hit other sectors of the African continent. Let's move on now to the Western African headlines. We've got a cocktail of some here. The IMF is saying good governance critical to COVID-19 mitigation and, of course, recovery. That's specifically to Nigeria. You have the Securities and Exchange Commission of Nigeria proposing amendments to the rules on depository and participants. Debt Management Office of Nigeria releases the second quarter FGN bonds issuance calendar. The Shoprite South Africa also begins process to exit Nigeria's subsidiary by December this year. KDM Energy says 15th lifting completed at Nigeria's Ajay field. And of course, BoA in Niger is paying some 5.586 billion CFA in total as gross dividend by May 6th this year. Let me start with you with this headlines, Onyeka, to tell us what you make of the GMO calendar and other headlines that you might want to speak to quickly.
Thank you very much, Temple. Yesterday, we saw the GMO release its second quarter bond issuance calendar, which is very interesting because it's showed that the federal government is looking to tap into the domestic market a lot more to increase their domestic borrowings. On average, in the second quarter, we're expecting to see an increase of between 10 to 15 billion in bond supply in the domestic market. This is in conjunction with the expected over 6 billion, I think around $6 billion tap into the Eurobond market. And all this is basically just leading to what we've been talking about since the start of the year. We're seeing the federal government in Nigeria actually focus a lot more on driving infrastructure, especially transport infrastructure growth in Nigeria. If this is actually utilized wisely, I think it's going to be the increase in borrowing will have really strong multiplier effects. However, we also have to we also have to put into consideration the Nigeria effect, where we tend to see good intentions fall by really poor execution in terms of managing, in terms of disbursing our debts inputs. And then just moving on to the Shoprite story, you see that Shoprite is looking to exit by the end of this year. They had already announced this a while ago, that they will be exiting the Nigerian market. We've seen that over the past couple of years, they've been accumulating losses upon losses. I think at the moment, currently, because they are holding it as an asset held for sale in the group business, we can see that it has the business has accumulated losses of somewhere around I think the equivalent to Naira is just over 20 billion Naira, which is significantly ridiculous, about 400 and something million rand. We've seen that they've been under pressure in terms of logistics management, in terms of cost and efficiency in the Nigerian market. Whichever company they are going to sell their franchises to is going to have to deal with that issue. When exiting the market, in my opinion, is not the be all and end all. We just need to make sure that the operating environment in Nigeria is just a lot more accepting, is a lot more hospitable for retail companies who typically deal with very low margins and inefficiencies in things like inefficiencies in logistics, inefficiencies in operations can lead to heavy losses on the for retail managers. And then looking at
Well, go ahead.
Yeah, and then looking at the IMF story, we saw that the IMF released the World Economic Outlook early this week. just after the Easter holidays, and we saw it was very diverging news, mixed news. On one hand, it was really good because we saw an improvement in global growth forecast to about 6%. It was about a 40 basis points improvement. And then even an improvement in the 2022 forecast to about 4.4% GDP growth. And we even saw improvements all the way down to 2024 growth forecast, meaning a consistent reduction in the expected fall in GDP over the next 4 years across most of the countries covered by the IMF. However, lots of this growth is largely driven by advanced economies and not the emerging markets and developing economies. We've seen strong monetary and fiscal support from the governments, from advanced governments, pushing lots of funding into these economies, which has actually rapidly driven global economic growth and the growth in these economies. On the other hand, most developing economies in the emerging markets have not had that same type of firepower to jumpstart the economies as fast as the advanced economies. And so we are seeing widening income gaps across the advanced economy and the developing economies. And one of the key things one key numeric factor that highlights this is the 2024 GDP forecast, where in the US, the IMF is now expecting the US 2024 GDP growth to surpass what it was actually what they were expecting in 2019. This was before the pandemic, while almost every other country across the world is still expected to see some deterioration with a stronger bias towards the sub-Saharan Africa and Asia Pacific regions.
All right, and thanks a great deal, Onyeka, for those contributions. Bosun, let me come to you for your comments.
Well, speaking to the Nigerian space, I'm not too sure. I think I have a whole lot of grounds covered across that particular the Nigerian space. I think the key issue is all about debt, how we're ramping up right now on debt, going to the Eurobond. The Shoprite story should tell us a whole lot. Shoprite is exiting a number of African economies. Fast and furious. It's all happening all across East Africa as well, Botswana, Kenya as well. Look, we want stores in Africa, but it looks like we like stores that we are close to. We like we have foreign taste, but again, there are a whole lot of issues about how the level of the ability consumer costs, for example. There's the issue of logistics. If you are shipping things into Nigeria through the Apapa, Tinkan Island seaports, and you are a Shoprite, even within Lagos, you know how many days or weeks it will get to get a container out. So it doesn't look very good on our books. Then you look at Kenya, which hardly have that of a problem, but a particular problem as well. So I think the big retailers, whether it's a Shoprite or Nakumatt that is already down and a few others, will have to go back to the drawing board and re-strategize their Pan-African expansion. The banks easily cross borders across in Africa financial services, and they do well, startups, fintech, and what have you. But when it comes to the retailers like Woolworths, for example, if you remember in Nigeria and a few others, it doesn't really look like a good story yet. So it may have to be, we need to rethink it in a manner of speaking. Some of these products may appeal, or the operations will appeal to countries in Africa where you have a huge majority of the Westerners, Americans and the Europeans who will be your customers, and you depend on them. If you don't have such huge community in Nigeria and you try to bring in a product and you think we appeal to Nigerians because you have some big places like Lagos, Port Harcourt, Kano, Abuja, and you think you can make sales, then you could be running into a problem. So certain products, certain brand appeal will make it very well in Cote d'Ivoire and it will make it to Nigeria, because we have a whole lot of different mentality about the European markets in Ivory Coast and Cote d'Ivoire that you have in Nigeria, Lagos versus Abidjan.
Thank you so much, Bosun, for all of those comments from you. Now move on to the Southern African space, where South Africa's factory activity was up slightly to 50.3 in March. Anglo-American saw some $440 million of rough diamonds in the third sales cycle. Zimbabwean dollar gains first time in 8 weeks, and of course Mozambique currency is beating up by some 14% since February 2021. Namibia's revenue authority is now fully operational. Let me come back to you quickly for this, Bosun, before hearing from Onyeka about some of the headlines he would like to make a pick from.
Yeah, I think the Mozambique currency story is one big story. Is the world beating currency this year, according to Bloomberg, because it's up 14% this year since February, despite the current problem going on there in terms of the insurgency, disrupting the LNG, Total LNG project in the country, and a whole lot of that. A few days ago, remember, AB InBev has also floated a new brewing facility in Mozambique as well. Mozambique is a bit of a bittersweet story, but I want to look more at the sweet story rather than the bitter side of it. This in Judge Sergeant targeted. The brewing factory up there by AB InBev is one of the largest expansion of footprint outside of South Africa, which is its main home country, which is also good. Then you find a few other operators, companies operating in Mozambique saying they're not going anywhere, they're staying there. So the currency has been up. The Metical 14% this year. That is good news.
Also, you know that beer is sweet and bitter at the same time, so that will blend. Well, yeah, kindly thoughts on some of these headlines across the Southern African sphere.
Yeah, we're definitely seeing, increasing factory activity. I think even the 50.3, 50.2 and 50.3 numbers in March actually belie, stronger returns to production activity across the country in South Africa as the economy opens up a lot stronger. I think one of the key sectors that keeps driving down the production numbers is still the brewery sector, where we are still having some forms of restrictions, which is definitely affecting the production. But in general, we are seeing much stronger production activity as the economy opens up. We expect that to continue, and as the government relaxes more restrictions, as I think earlier this week we got good news. The more resistant South African strain of the COVID-19 virus has been seen to respond positively to the Pfizer BioNTech vaccine, which is going to be very positive, and this is going to be very positive for the economy if vaccinations are able to ramp up in South Africa.
Thank you very much for those. I appreciate them. Let's now close northward with these headlines across the northern part of Africa, where Egyptian meat seller Tiab sells 75% of shares to Emiratis Actia. Egypt again, you got Algebra Ventures floating some $90 billion funds to invest in startups. Middle East last reports over 93 million Egyptian pounds in profit for 2020 fiscal year or financial year. You have PMCI setting 571 million dirhams as total dividend payout for the year 2020 as well. Arab Bank of Tunisia is to hold a general meeting, that's the annual general meeting, on April 23rd, later this month. Now let's get Ali Segar to help us understand all of these headlines from the northern parts of the continent.
Yes, it's a big news.
And Ali, perhaps you would like to speak to the debt and the Eurobond sentiment that we are seeing across countries now.
Yes, I will first speak about, we can say, the stake of Ismailia is quite interesting, to see that UAE company is buying, we can say, stakes into an Egyptian company, and mostly we can say on food processor. It's kind of something new, in fact, from Gulf countries to Egypt, because from a long time, we can say Gulf countries invest a lot in the banking sector in Egypt. So you have First Abu Dhabi Bank there, you have Emirates NBD, you have Qatar National Bank. So all this, we can say the financial sector is heavily invested by the Gulf banks, because for Gulf, it's quite natural to invest in, we can say, in a country such as Egypt due to cultural reason and also due to the distance. It's really close and all this. What is new? This is in fact in terms of food processing. Egypt is struggling a lot on the food safety, in fact, food security, like they struggle in the Gulf. So to see that these investments are going to Egypt to try to, we can say, to tackle this new market, it's quite interesting, because Egypt is seeing a big, we can say, demographic increase. They have some issues also with the dam, we can say, with Ethiopia, with the dam stuff. So to see that Gulf countries are investing a lot and heavily in the food industry is quite interesting. It's for me, we can say, a big opportunities for Gulf countries to make a big margin on the food industry, because food industry is something we can say a little bit, we can say, backwarded in Egypt. It's not really modern. We don't have really, can say, modern supply chain, all this kind of stuff. So to see this investment will ease food security in Egypt.
Thank you very much. But lately we've been seeing some appetite for Eurobonds across the African countries in the continent. I mean, what do you have to say to that?
Yes, so the Eurobond is quite, we can say, interesting, and to see this risk appetite growing into, we can say, into the Eurobond is quite interesting. I think for a few reasons. First of all, we can say we don't have a lot of vehicles to invest in most of African market. So to see this Eurobond, it's a new, we can say, it's a new vehicle that they can invest a lot. And it's also, we can say, a stable and secure vehicle. It's not equities, it's mostly bonds. So it's mostly backed by a government and backed by the state. So to see that there is a risk appetite on this, it's quite, we can say, natural to see that, in fact.
Right, and thanks a great deal for that. Bosun, before we close, any additions on these headlines here?
I think I love the kind of corporate news that comes out of Africa on a daily basis, whether it is the Middle Eastern guys investing in Morocco, in Egypt, and others, and inter-Africa relationship. And I like the story about the Egyptian, said Algebra Ventures puts in about $9 million or there about $90 million fund together to support startups. I'm seeing a whole lot of startups in Egypt in recent times with the news all over the news media and all of that. What I would want to see moving forward is to have a whole lot more of these companies listed on the various exchanges on the continent. Just the way you find you're looking at the Liberal, IPO on the New York Stock Exchange and the rest of them. It's good that we have these startups in come up. I think what is left now is for the financial markets and financial services operators and the regulators across the various jurisdictions, and these are my views, to get some of these companies listed and take them to the next level. We need to deepen the Africa's capital market moving forward. So it's not enough to support the startups and getting the funding need, but we need to start finding a way of midwifing them as quickly as possible, but do them very well and make sure that they go into the various exchanges. And I'm sure that there are a whole lot across continents picking up that we can look at the regulations around the various stock market, around the various securities exchanges, and see how we can rejig some of these regulations to ensure that these startups, whether they are fintechs or in the food processing or whatever, can move on to our stock exchanges. We have a number of companies in Africa, by the way, Temple, that are indigenous to us that we can take to the capital markets. So I think we need to start working on that. But I think it's something that we need to focus on.
Thank you very much, Bosun. Thank you for those comments there. Thank you, gentlemen, for your analysis on the show this morning. Onyeka Ijoma of Critical Capital Management, thanks a great deal for your analysis. Ali Segar of Segar and Associates based in Dubai, appreciate your insights. Bosun Omofa, Executive Editor here at Frontier Africa Reports. Thank you so much. This has been the show for today. I'm Temple Ashaju. I'll see you next time. Bye for now.